and welcome to a weekly look ahead at the markets here. And we've got a busy week ahead, although it's the Fed blackout period ahead of the January 31st, February 1st meeting. We won't be hearing from any Fed members on their take on monetary policy. That's mercifully, you might say. But there is a busy week of earnings ahead, about a quarter of the S&P 500 by market capitalization report this week, as do a number of Dow components, so expect some volatility around those releases, the likes of Tesla and Microsoft among some of the biggest names, alongside the likes of American Express on the Dow. Busy week for data. We do have some inflation numbers to run through. The Australian CPI numbers. Now, they ticked higher in November. They had fallen back in October, but then they re-accelerated in November. So that puts a bit more pressure on the Reserve Bank of Australia as it looks to exit its rate hike cycle. Further upward pressure on inflation would put more pressure on the bank to hike. Now, markets expect something like maybe two more 25 basis point hikes this year, taking the terminal rate to around 3.6%. But should inflation move materially higher once more, then we might expect that terminal rate to be repriced. We're also looking towards the end of the week at the Tokyo core inflation number. That's an important leading indicator for national inflation. We saw that last week as the Tokyo core number had moved from 3.6 up to 4%, and on Friday the national number also moved up to 4%. So inflation at multi-decade highs in Japan. That piles pressure on the Bank of Japan to exit its yield curve control policy. Now, on the meeting of January 18th, it decided to stick with it. There had been expectations that the bank would move further away from that yield curve control policy after it extended the envelope and the trading range for the Japanese 10-year government bond yield to 0.5% from 0.25%, and we saw that envelope being pushed by the market. But the pushback from the Bank of Japan has seen the 10-year yield move back towards 0.4%. So the Bank of Japan has control of it at the moment, but we expect there will be some testing of those levels once again. We're also looking at the Bank of Canada. It's expected to raise rates again, although there are signs of cooling inflation, so this might be the last one. We're not 100% sure on that, but we do expect that the tight labour market means the Bank of Canada will be raising rates again. Then towards the end of the week, we have the US GDP numbers, seen around something like 2%, although the Atlanta Fed number says 3.5%, but that's usually a bit high. So we expect something like 1.9% maybe. The Conference Board increased its expectations for the fourth quarter growth from 0.7 to 1.9% earlier this month, amid signs of some strengthening in the fourth quarter, although we have seen some weakness in the manufacturing and industrial output parts of the economy, and there'll be a heads up on that with the PMI release towards the start of the week. We get the global PMIs from Eurozone, Japan, UK, US. They were showing weakness towards the end of last year, except for the Eurozone, which did improve slightly. And so we're looking to see to what extent that trend is accelerating, or whether there's some improvement across the global PMI space. But weakness seems to be the order of the day. Then finally, on Friday, core PCE numbers from the US. That's the Fed's preferred gauge of inflation. That's been cooling recently, helping lift market sentiment. Further cooling might not do much, so because recession fears are now front and centre, but it is the last piece of the inflation jigsaw ahead of the Fed's meeting on January 31st. That's it for now. Thanks for watching.